So we've got guys here, like sitting every day. They're always talking, they're conversing. They've got the trading floor voice. They're very sort of, shall we say, trained through just like a decade plus of experience and just being like so efficient, so good at communicating exactly how, communicating information with purpose, things that matter, things that don't matter. They're like a gigantic brain that can digest everything, okay? So if I just go around, again, same thing. And right around, we have all of these guys here. And as usual, good morning, good afternoon, and good evening to all those from around the world watching. I know I've got quite a lot of different guys coming in from different places. So let me just have a look at the chat. As you guys can see, got a bit of a different background today because I'm actually in the office. So for those wondering what's this background, this is just one room from the office. I had a bit of business-related stuff to do this on the weekend. Now sort of running out of time to get the stream done, and I just thought, why don't I just do the stream in the office directly? So here we are. And in doing so, then I can also show you guys a bit of the office as well. So if you guys bear with me, I'm going to try and connect through my phone, and then we're just going to walk around to the office so you guys can see a bit of the setups, all the monitors in all their glory, all the gaming chairs. That adds 100+ edge to all your trading. But there we go. So just waiting a few more minutes, guys, just 1 minute, hang in there, just for a few guys to come in, because we usually trickle in very slowly. So just a few runners at the end. And then we'll also discuss today, once we've done through a nice office tour, the question about, I think something that's often been very misguided, something about the difference between a proprietary trading account, a prop trading account versus a retail account, and why I think it's not so much a debate, one is good, one is bad. It's just there is one that is more applicable to you depending on your trading career. Yeah, Dave, let's see where let's see where the bread is made, exactly. So, cool. So, okay, so let me just show you this, guys. I know the audio might cut in and cut out, but hopefully that'll be fixed now. So let me just show you this on my end very quickly. Will this work? I believe it should. There we go. Let's just load up all the cool. Very good. Let me just see if I can see you guys in the chat. Okay, so as you can see, so as I mentioned before, as I alluded, proprietary trading accounts versus retail accounts. Before I get started, guys, some of you may be new, some of you may not have seen this link. So for you guys, if you want to have a different approach on trading, a different approach on tools, answers to why perhaps you might be stuck in your trading, then I have no other best place to send you to other than visiting this link, which you'll see right on the screen. And if you're on YouTube, you should see that, or on any service, you should be able to see that in the description. Please follow the link, elitetraderworkshop.com, and the link will tell you all you need to do from then on. Anyway, guys, let's get started. So let me pull up the chat one more time. There you go. Okay, so let's use my cool, for the second time, if you guys recognize it from the last stream, the cool board. Anyway, so we've got here the prop. Is that coming through all right? Yes, it is. The prop side and the retail side. So I think I answered this right off the bat, guys, but which is better? And the right answer, in my opinion, and a lot of the answers really, even us as from the prop side will tell you, the right answer is all about where you are in your trading career. Okay, that's basically the gist of it. But the reason why, and the logic and the reason why this might be, is actually often overlooked. And ironically, when I often hear arguments online, or you see people discussing it, I feel like they're just discussing very, very minor points, which are actually kind of like they're not the main thing, not the main thing you would expect answers wise. Okay, so we're going to go through them all today, and then see Stephen and Morgan. Hello, guys. Dave. Anyway, so one of the big things, and this is why we're going to show the trading floor today, because I'm here anyway, coincidentally, is the fact that when you often have a prop trading account compared to obviously being on retail side perhaps, is you have a trading floor. You have insane learning opportunities, and besides learning opportunity, you have the ability to something we'll call like flow. And what I mean by that is discussions when markets are moving, when news is coming out. You have the ability to say, you know, I'm sitting here myself, there's going to be one guy next to me, one guy in front of me, else you'll see literally right now on the floor, you know, behind me, whatever. And you enter this sort of the collective brain, the mentality, where everyone's digesting everything in real time. Trading is you know, full skin in the game, and you learn to trade, you know, as one, as a team. And I feel that's very something that comes off very strongly for me. If you watch the interview I did with Richard, I think a few weeks ago, he will tell you how a lot of trading floors beforehand, you know, when he was starting off like 10, 15 years ago, a lot of it had a very sort of closed mind mentality, where they wouldn't necessarily, you know, share or collaborate. But the nature at which we do, you know, things on the floor here is extremely collaborative, extremely performance based. And again, I keep saying this, but when we'll go upstairs, I will go into it. So hope you guys can see this here. Now I'm at the main entrance. See if I can see the chat here. Main entrance, bit swanky with some of the furniture here, but I like it. It's very nice. Some of the books. And here we go. So main entrance. Got some nice, if you guys can see it, some artwork here on the main market history, the tulip bubble in the 17th century, the gold bubble, and the first trading pits, 19th century, and some history here. Hopefully you guys can still see the connection hasn't failed. I hope it's actually better now. It's not so pixelated. But anyway, here we go. So here's where we have the first floor. This is where a lot of the, you know, the senior guys, the big guys, they're all in here like every day and so on. So let's go in. Okay, so hopefully I won't move the camera around too much so you guys can take it in. But here we have the main room, the hunting ground, shall we say, without making it too cheesy. But here we are. Got some of the traders here. If I whip right around, we've got, you know, I don't know if I can see the chat very well, but hopefully once I sit down, I can answer some of your chats. Again, as you can see, a very healthy amount of screens. And what you will see a lot of the time is that here, whenever you have, you know, these monitors, you look around, everywhere you will look on these monitors during the week, everywhere you look, you'll see price ladders everywhere, very price ladder and order flow centric. For those people who are asking, do you guys use price ladders? Well, the answer is, you know, of course, and you can see that. And I think you guys might recognize this setup here from a certain trader on a lot of our playlists. We should call him the macro news attacker. You can see a lot of his videos on YouTube, the playlist, the elite trader attacks data or news or CPI. So you guys should check that out. Again, so, and I think really, I really should mention, like on this side of the room, you know, we got guys who are really, okay, I see quality, okay. So we've got guys here, you know, like sitting every day, they're always talking, they're conversing, they've got the trading floor voice. They're very sort of, shall we say, trained through just like a decade plus of experience and just being like so efficient, so good at communicating exactly how, you know, communicating information with purpose, things that matter, things that don't matter. They're like a gigantic brain that can digest everything, okay? So if I just go around, again, same thing. And right around, you know, we have all of these guys here. So here we go. And I see some people asking about monitors. There's some people asking about monitors and why so many. Well, this is the thing. It depends what kind of edge you're trading, but just by the nature of trading, you know, a lot of news-based, a lot of different trades that you'll take, you just need a lot of price ladders. So literally just all fill up price ladders and different things, and just general purpose stuff like you know, having your browser up, searching things. They take up a lot of screens. And to be honest, guys, if you're spending here 12, 15 hours a day, whatever, you know, every day, you want to make it easy for yourself. Why do truck drivers have a crazy amount of space in their cabin? Why do they have beds and whatever? Because they want to make life as easy as possible for them, because this is where you're spending, this is where you make your bread, to quote some of the guys from earlier. So you want to make life as easy as possible, and well, you can do it. Why not? It's easy to do with today's sort of costs and technology. So there we go. And I'll show you the outside view as well, but it's currently very dark at the moment, so as you guys can see. But anyway, so a bit of story time. So I think with these guys, again, it's a huge. This is where all the senior guys are, and we often hot desk some of the more junior guys around here to sit in here and absorb and learn. But when you'll be coming in here, again, yeah, I mean, yeah, there's a kettlebell there, sort of hanging in the corner, Stephen. When you'll be coming in here, I mean, yeah, you've got general chit chat and whatever. But when the flow starts and when the news, or when there's good trades happening, these guys will be like on it, like that you cannot conceptualize at the moment. They're so on it. They're so reflexive in how they react to certain things, right? And you can see how that information just whips around the room and people talking really efficiently. To be honest, the way they would talk is exactly like how perhaps police or sort of efficient teams or the military would communicate with each other when things have to be quick and efficient. And they've got that sort of environment, that culture down to a T. So you have that sort of that cross room flow. And again, since we're talking about prop and retail, this is obviously one of the huge things that you have enabled for you. As again, if I just walk around the room. For those guys to see, we have a trader who's sitting here. This is actually one of the hot desk seats as well. If he spots something and he understands something that perhaps another trader may not, he can communicate very efficiently. He can send that over, and both guys can benefit. You just have that sort of that collective mind to just be on it 24/7. Which again, if you're isolated at home, yeah, especially if you're trading to perform, trading at a very high level, high caliber level, which all of these guys are, to be honest. You need that, this is why, again, I'm going to talk about later why it depends where you're on your career, and when you reach this sort of this pinnacle, this seniority and what you're doing, you again, being on the floor is very much needed. And it's other things as well, like pushing each other, driving each other, motivating each other, instead of just being sort of at home. So there we go. That's the sort of the first floor sort of view. Got Draghi there, and a few others. But yeah, anyway, so this is that's the first floor for you guys. Got some more trader history up here. But now if you go to the second floor, I see a lot of comments there, guys. I see a lot of comments on the thing, and I'll definitely get you guys once I sit back down on the computer. It's just my phone is a bit clunky in how I can barely see your messages. So anyway, here we are, second floor. So the second floor is really a mix of like senior and junior guys, and this is where you want to interweave, right? Because this is where, for example, we talk a lot about this. You have vertical learning and understanding, and you have horizontal learning. Okay, so vertical is you learning from someone senior, you're learning from a mentor or whatever, and when you're learning horizontally, you're learning literally, quite literally. You're learning across the guy sitting next to you. He's learning from you. The guy behind you is learning from you, you're learning from him. And you have that horizontal sort of development, push, drive, just like you would in any professional sport teams. So as I said, especially when you look at the proprietary trading side, it's a lot easier to understand this through like a sport metaphor rather than an art or science or anything else. So let me show you the, so you've got a few more desks. I was actually, for those curious, actually sat here for like a long time up until very recently. So this was my sort of little corner of the world for a while. And this was also my desk mate, who I'm not sure if he wants me to mention by name at the moment, so I will keep that for later, perhaps. Got a few of the guys here, and then one trader you guys might well, you won't recognize him because he's not here, but one trader, of course, is Harry. So yeah, this is where Harry sits. Again, just opposite to him. So this is why it's easy for me to communicate to you guys, things we've been doing on the floor, because again, we're right next to each other. So for those guys who recognize Harry from the streams. Here is his sort of his paddling pool, shall we say? Trying to find the metaphors here, and then of course, you know, another desk for other traders. So yeah, I mean, this is basically the second floor. This mix, this interweaving of, like, you know, more senior older traders, more junior traders, to have that sort of the horizontal developments. And you know, if you're more of our junior guys here. For those asking if I'm in, I think you're saying, are you from Germany? No, I'm not. Sorry, I thought your question was, are we in Germany? And I was going to say, no, we are in London. But yeah, there you go. Just more desks. This is more like the spread side of, like, you know, junior traders. Some of the senior guys over there on that side. So there we go. So that's the sort of the mix, the middle ground between the two floors. And now if I go on the third floor, very quickly, and I think this is what you guys might find a bit exciting, because hopefully I won't lose connection, but I'm going upstairs, so it's probably fine. Again, so this is the third floor here, guys. So for those, this is basically, you know, guys who have just come off, you know, like the newest of the new, shall we say, you know, the new babies, the new kids, disregarding age, because we have people of all ages. But anyway, so this is like the first entry levels, shall we say, and this is where yeah, you know, some of the guys sit day by day. And for those also wondering, this is why I'm also sat here myself now, and we got some space there for someone else, purely on the fact that we thought it was best also to have that sort of, again, that horizontal learning. So from, you know, from my side, is that I can sit with the, you know, the new babies, the new kids as well, and sort of have that sort of that scaling down where I can pass on also my sort of understanding, knowledge, and everything, because, you know, being ahead sort of on that learning curve, on that progression curve, you know, you can still much more, you can still pass down, you know, knowledge and understanding and everything. So this is why I'm up here now for a while, to sort of help the new guys out in that regard. And of course, you know, we've got integrations and support from all of the team, but it's sort of the more hands-on intraday, day-to-day stuff. So I think you've seen too much of my face, so let me just show you guys one more time the third floor. So for those guys who might be joining in late, this is our London office on the third floor. So let me take you guys now. I see a lot of questions coming in, so let's just, don't worry guys, I'll answer it soon. So for those guys who might be wondering, I also want to show you the sort of the non-trading floors, because I think that's also as important. And it'll link to one of the things I want to mention about, you know, differences in prop floors and training and environments. And for those joining us, I think later in the year, I think some of the viewers, some of you guys right now, some of the viewers, I think some of you guys are joining us in-house later in the year, so you probably know the office very well. But so you can see as a preview of where you guys will be, I'll show you now. So this is, you know, gone on the first floor, and we have ourselves a little nice, shall we say, kitchen, of course, coffee machine, of course, and a little bit of a, you know, breakout room, fridge and everything. Anyway, it's a bit of a sort of a resting area. You know, what you would call it? I don't know. Not a living room, but it's equivalent. Anyway, so that's the thing. And now if you go down, hopefully the lights will turn on. Yep, here we go. So for those wondering, we also have, I think the connection here might be a bit spotty, so I don't want to push my luck. But if you go down this way, we also have ourselves the yoga room. So if I just keep going, anyway, it's down to there, and of course the gym right at the end, and then, you know, everything related. But so go from there. But what I really want to show you guys is this: the really good training room. If I just come through here, it'll turn on. Unfortunately, guys, as you know, it's been empty because of the COVID restrictions. But here we are. Hopefully, once they're lifted, we can get you guys back in here as soon as possible. Yes, this is the training room. This is where you'll be with Richard and other guys, Alex, depending on the day. And yeah, this is when I came to Axia as well, I went to the training course, and this is where I was for a while as well, like in front learning. Every junior guy that's come through comes through here. This is sort of the first station of, or the first drop-off point, shall we say. And I have to say, very well equipped, very homely, and yeah, it's a nice place to be, I have to say. So, and I think a random massage, maybe for the best trader in the room as a reward. Anyway, hopefully that didn't blur out too much if connection-wise. So again, it's a very good question here from W Days. Basically information input. How can you realistically take in all the information? Well, to be honest, a large part of your edge is your filter of understanding what's relevant and what's not. Okay, so when you think about that, it actually makes a lot of sense. Like, you want to have the maximum funnel of information towards you, but it's up to you through your edge and through your discretionary ability to figure out what's relevant and what's not. And you'd be surprised how fast that becomes automatic. And don't forget, also, you have 11 other guys in the same room as you, digesting the same amount of information. Again, the power of being on the floor. And and yeah, it depends a lot on what your edge is, what you're trading, how you're trading, and so on. And just for the guys trading, all over, perhaps more of Axia style, it does learn to having a lot more price ladders, but it's not necessarily a firm requirement, shall we say. But as I said earlier, if you're spending here 10 hours a day plus minus, you want to make life easy for yourself. You don't have tiny monitors. You don't want to squint all day. You want to you want to make everything easy. Same like driving a car. Like, you want to have all the mirrors up all the time. You want to make it comfortable. You want to make it easy. You want to make it safe. It's the same logic. So so there we go. Okay. So one last question here from James UK. Do you ask for feedback on your trades with other colleagues on the floor before, during, or after a trade? Yeah, 100%. And this is what I meant about the vertical versus the horizontal. So of course you have, mentoring and everything from the vertical perspective, but horizontally 100%. Like it's everything from, hey guys, we're going to have a floor meeting. We've got to talk about X, Y, and Z. Everything from that scale to, sometimes you might talk to the guy who sits next to you, who you'll get to know very well because you do that every day. You'll talk to him about your trades. He'll talk to you about his trades. And it might just be as simple as like you meet in the kitchen with someone and you just happen to discuss the same trade they took as you. It's that kind of thing. So there we go. Okay, so let me go back to some of our more finer points here. So I think you guys hopefully I've done a good job of now explaining the power of the floor and the the learning and the flow. And the flow, by that I mean the communication flow. Now let's talk about something about leverage. Okay, something which, again, I use that word sparingly. I'm afraid to use that word leverage because it means, from the retail perspective, there's such an abused word, leverage. Like, what does it mean? And you often find people, hey, how much leverage can you get with this? How much leverage can you get with that? The point is, leverage is kind of the last thing that you should be considering in your trading sort of, let's say, escalation of a career. Okay, so if you guys can see this, let's say this is your learning, this is your career progression and your learning, right? When you're in, when you're here, you want to be learning X, Y, and Z. You want to be learning up from down. You want to be learning strategy and edge, and applying leverage too early. All it is just going to blow you up constantly, as everyone can attest who's been involved, in anything Wall Street bets related, anything GameStop related, anything, early days for Bitcoin related, and so on. And so the leverage, this is why I say on the retail side, it is not so important if you're early days in your career. But when you're trading prop, it is very important to have that sort of that leverage relationship, because you experience two things. First of all, you experience something called non-linear growth. Okay, so what you'll often have is that if there's crazy opportunities in the market, such as huge news, like for example the virus last year or the vaccine in November, if you're bound to having small leverage, but you can trade well enough where you can take advantage of that leverage, but you do not have it, then you can't 10x, 20x, 50x your trading account, your career, your future. But I'll tell you what, for some of the more junior guys, the younger guys, the ability to have that leverage on that prop side, it essentially became life-changing in the past year and a half, where they were able to take huge advantage of a lot of the opportunities that are involved in the market and just absolutely not only transform the trading account, but their career as well, because they have the ability to slap on way more leverage than you can ever find on the retail side, okay? But that doesn't mean, the retail side, whatever, is bad, because usually if you find yourself in that situation, it probably means it's too early in your career to apply that leverage. It's more about having the leverage at the right time, okay? And also as a side point as well, usually find that the round trip, your commissions is much lower on the prop side as well. So it's gonna, for example, I'm not sure if you guys have perhaps come from any spread trading backgrounds, but if you look at any spread trading strategies, you'll often see when you're trading like calendar or butterfly, sometimes trading that on a retail account becomes so prohibitive because the cost is so high for that strategy. It basically kills the strategy because the cost is too high. And obviously you don't have that on the prop side, but even if you're trading outright, so you're trading very actively or big size, it just saves you a huge amount. So that's kind of like should we say a side point, but it's a very very important one, and you'll have much higher fees on the retail side. But the main thing is this leverage aspect, and so you can unlock the non-linear growth. And this is the thing: if you guys will now look at any sort of generic retail broker, is the fact that the size you can trade, 1 lot, 2 lots, 10 lots, 15 lots, is mathematically determined by margin, the margin the broker gives you, okay? And that's basically very linear. That's 1-to-1. So you will it's basically your account grows, then you can add a few more lots, you can add a few more lots, but then if your account goes down, you have to reduce your size. You have to reduce as many lots as you can trade, because the mathematical relationship your broker gives you, like for example, if I make up something on average, let's say you need like $2,000 in your account for every 1 lot you trade of crude oil, let's say, roughly. That's a linear relationship where your account has to linearly grow to trade more and more size. But that's if you're later in your career and you can trade very well, and then it becomes your sole source of income trading, you want to leverage the same way. Let's say you've developed an incredible business and you want to leverage that business as much as possible to grow the business as exponentially as possible. Or let's say you have an athlete on your team and you want to support him as much as possible. You want to push him with as much, let's say, business funding or support for that. And the same way you want to support your trading account by having this ability to apply leverage at the right time. And this is why a lot of the time, as I say here, your ability to increase size is more relationship based with your risk manager on the prop side usually than it is mathematically as it would be with a retail broker, okay? And what does that mean? And this is what I mean about here when I say absorbing the hits. What I really hope, guys, is that you'll be able, for those guys who are on the Axia Premium streaming service on Friday, so this coming Friday, is Harry will be doing a stream about his worst week in his career that took place last week, unfortunately, okay? For various reasons, and I think that'll be a very powerful stream. So for those guys who are on it, please watch it, because I think it'll be very good. And we like to emphasize, it's good to talk about the progress and the good stuff, but also to really nail down and really go through, even more importantly, the bad stuff, like big drawdown weeks, days, the things you can learn from it, what you can take away. But importantly, what you'll know from that story is the fact that even if he's had drawdown, if you'd have that drawdown, let's say in your retail account, like he would have had last year or any trader, or last week, sorry, or any trader, he would have to decrease his size, okay? And that becomes that much harder to then just make back what he lost, because then he has to decrease the size, he's trading with less firepower and so on. But because he doesn't, he has a relationship with the risk manager. He knows he trades well. He's learned from the week before. Everyone's confident that he can improve and learn from it. There's no reason to adjust his trading size. He can trade the same size as he was the week before, which means all he now needs is just one, very, good trade to come along, nice and easy, do it with size, and then he can easily absorb any of the losses, absorb the hits he's had last week, and that is critical. And that is the one thing I want to point out, guys, the one big thing, which is often not discussed in this kind of argument, that ability to hold the same size as your account enters drawdown, as any strategy naturally will, or any approach naturally will. You will go through those periods. And it is a killer to always have to just climb the same hill over and over again when you have that linear sort of margining requirement from a retail broker, okay? If it's that right time in your career. Now, and as I said, from Harry's perspective, because he can keep the same trading size, even though his account, slightly decreased from where it was before, it's fine. He can, he can relax, take one good trade, and he's already back to where he was. And, he's learned from it, and he can move on, and then he has that growth. Okay, so that's one thing about absorbing the hits. But one last thing I'd like to mention about this non-linear growth, and I'll put it here, is the fact that for you guys who may have watched, more of Axia's early streams, and I really recommend to those guys right now, if you go on the Axia channel and you look at, in fact, let me see if I can find it here. Actually, I'm worried about the audio feedback. So, but if you guys right now on the Axia channel search Joe, he is a very good he's a very good example, of someone who was applied the leverage at the right time, okay? Because he was learning, and so on, and then he had that consistency where we can come in and apply that leverage at the right time, and then he'll have his non-linear growth where he can just take off, okay? And again, you will not have that exponential growth easily in your retail account. Okay, so moving on as well, as I said, guys, again, your risk manager is 1 billion% invaluable. Your support team is invaluable. And as well, when things go wrong, perhaps, or let me rephrase, if you're trading big size, you always have to be prepared. You as a trader, it's your responsibility to always assume something will go wrong down the line. That should be natural to anyone in any industry that deals with any kind of risk. It's not just trading. If you're a pilot, if you're a ship captain, you always have to assume what are you going to do when things go wrong. And if things go wrong when you're trading huge size, okay, you want to have someone that has your back, okay, which is your risk manager, and not necessarily in that case, but also just for someone to watch over you, have that sort of that detached ability, But that also feeds into the support team. And again, if for people who watched Rich's stream 2 weeks ago, he'll tell you how, specifically more at Axia, every senior guy who's come through has had that experience where with other trading floors, there wasn't necessarily that support, there wasn't that mentorship, there wasn't that collaboration, that ability to lean on other people, but it's literally the exact opposite in, over here, because we have all of that, even as far as, having a gym, having, as a, well, you didn't see the gym because it's dark, but the gym, or, something outside just the trading floor, in that sense. It's sort of that holistic, support structure. And the one last thing I'd like to mention, guys, here, and don't worry, for those guys wondering, it is not, for those guys joining in late, it is not about that the prop trading account is 100% better in every way than retail. No, in fact, it can even be the wrong thing depending if it's too early in your career. And I'm going to talk about that in a second. But let me just finish off here about margins holding steady. So for those who hopefully were trading, in and around, for example, basically all of last year, you would have noticed that a lot of you would have got notices from your broker saying, our margin requirement to hold a position has gone up, it's doubled, tripled. I think when oil was going wild and oil was collapsing, down to like single digits and then negative, I can't remember, but I saw somewhere like, some brokers stopped trading, or like the margin requirement to hold even one lot went up like 10 times or something. And that's very difficult if, as I said, you have reached the right point in time where you can take so much advantage of that volatility that if your broker cuts you off and says, hey, you have to reduce your trading size by 50%, then you'll completely be unable to take advantage of that insane opportunity because of that simple reason. Okay, and on the prop side, what you'll notice, unless under extreme circumstances, but even then, more often than not, the margins, the size you can trade, even if they're changing for a lot of the industry on the exchange or the retail side, it will hold the same for you, and you can trade the same size as before. Okay, so as I said, because a lot of the guys here in summer, they were trading the same size because they could, because the margins did not change, or they traded even more size in specific opportunities and so on, and they were not cut off from that opportunity because of margins, that mathematical relationship to margin. Okay, so that's from that perspective. But as I said, if you've noticed everything I've gone through right now, if you looked up, when I mentioned, let me just change color here. When I talked about leverage, when I talked about that growth, absorbing the hits, relationship, so on, that is, I think, really when it's there, the right moment in your career. If you've come to trading and you're brand new, you're basically a baby, then there's nothing wrong, absolutely nothing wrong, and in fact, even better, to have a retail account. And why is that? Well, okay. Well, firstly, mentioned for those guys who, I think we're all futures traders here. So obviously I don't have to tell this to you guys since you guys probably know this, but with all the broker, on the retail side, with all the brokers that are out there in terms of CFDs, spread betting, Robinhood style accounts, whatever, where you trade off your phone or your platform, that is probably the furthest away you'll be from an equal playing field, okay? The future side, even if it's on the retail, the future side, or futures, let's say options as well, but let's just say on the future side, will be the closest you will have to an equal playing field, no matter what, okay? No matter what. And, if you compare it to the CFD world, to the retail world, and again, probably I have the feeling I don't have to explain why to you guys, because we're all futures traders, but again, just to quickly go through it, the lack of information by not having a price ladder is ridiculous. The spreads you'll have to take because of your your CFD or retail broker forces you to take them, or just the existential crisis. Like, let's say you do in fact manage to grow your account to a large amount, and then you're trusting it with perhaps a shady CFD broker in the middle of nowhere. Whereas the future side, even for retail, is extremely regulated, transparent, and so on. Okay, so especially for like on the future side. So again, I want to preface that by the retail is still, futures broker is still the closest to the equal playing field you can have as a new trader. And here, this is a big one for those guys who came to my scaling stream last week. Again, I probably don't have to tell you guys, but this is the thing: the account requirements, and this is now we're going to talk about the disadvantages. Okay, the disadvantages from the prop side. Usually, and I saw a question here about the account size when you should trade on the prop. Yes, the barriers to entry are higher because you have to absorb different costs, and you generally have to have a bigger account size to trade in prop. That is a disadvantage. Okay, so fair enough. So this is why having it from a retail perspective is much more sensible and advantageous to have it, with a futures retail broker. So it makes sense for smaller accounts. And now, especially, there's so many different micro products coming out that this reasoning, you can double down on this reasoning and say, hey, this is 10 times better now. Okay, because I think a lot of you guys talked about micros before, but a lot of the strategies you can trade from like the professional point of view is the fact that you have a big account and the size you're trading is you're not undercapitalized, perhaps you're overcapitalized. But one of the big things that kills a lot of new traders is being undercapitalized. And do not, again, if you guys want to take away one big thing from the stream, do not underestimate how bad it is being undercapitalized and how it can really, really affect your psychology, your trading strategies, and your ability just to trade with just for everything to come together. And granted, of course, I would say, if you got like a certain account size, trade as small as possible. That is realistic. If you do not have let's say you can only put up, a few $100s or like 1K or something, doing pounds. Let's say you have 1K or under, you can simulate, or perhaps 2K or whatever. Let's just make up a few numbers. You can simulate having a large account by trading the micros, because of course the leverage matches the your account size, and you'll be able to trade that much more clear-headed, appropriate strategy, and so on. And do not underestimate. And always assume. Let's say I'm not a huge fan of this, but let's say you guys can concretely come up to me and say, with my trading, my strike rate, and the amount of money I can make on trades, is somewhere like, I don't know, 60% of the time. Do not focus on strike rate, guys. As a side note, it's always about expected value. Okay. If you guys don't know what that is, I'm not going to go into now, but Google expected value. That is much more important than just strike rate. But let's just say you're coming up to me with your strike rate, and let's say that's true. But you should always assume that that's only in optimal conditions. Okay. You have to assume you need to have a margin of safety. To quote a certain man from Omaha, you need to have that margin of safety to assume in real life it's not going to be 60, it's going to be 40. Okay, and you have to be able to wear those hits, which you can much more adequately do when you're trading the micros to match your account size. Okay, and that's why from a retail side, it is much more realistic to have it on that. Okay, so and this is the big thing. Then you might say, why even do this? Why even put up a small amount or whatever? Well, this is the thing. This is it here. Personally, for me, and I'm still very much convinced of this, and I can see this in a lot of the time, you should be spending a lot of the time, perhaps not even trading, and literally just watching markets absorbing. And then when you go to the next step, you should be trading on the sim. It has huge value. Okay, do not underestimate the time spent on the simulator and the learning opportunities you can learn. But then the next stage is not then opening, I don't know, let's say something very like a small, let's say like 3,000 account, and then trading like so much size, I don't know, in crude that you can barely, like the market only has to move against you a certain amount, and then you have 2 or 3 lots in crude, and then you automatically get liquidated. You're not going to be learning anything then. You're just going to destroy your account. You're not going to be taking it in. But again, if you simulate the microenvironment or so on, it is useful then with a retail account to have skin in the game, because it is absolutely critical for the next step, which is then saying, I'm going to now learn going, from the sim. It's like the in-between step. You can go then from the sim to trading a much bigger account, to where probably if you're doing that, you probably have turned into the like doing it full time, professional, as in, you kill what you eat what you kill. I need to say the other way around. You eat what you kill. This is your main source of income. So until you leverage and until you go on that side, that's going to be the in-between step to have that skin in the game, to make you sort of, I don't want to say comfortable, but at least understand that you're trading with real money, and you have you're sharpening your tools and so on. So you have that element, and I would say that is the most appropriate thing to do through a retail broker. Okay, and why is that? It's because admittedly, of course, you do have fixed costs in prop trading, and that is very variable. That is very, very variable, your fixed costs. But again, just simple things like data from the exchanges that changes. That's much higher. And so if you have a tiny account and you somehow have that in prop, your account would just get withered by fixed costs. And why is that important? It's not necessarily because because you're being you're drawing down on their account. But if you have such a small account, it doesn't leave you enough time to learn, to digest, to figure things out. You're always stressed about making it now, this month, today, tomorrow, and so on, and to your detriment. Whereas you have a lot more time to be flexible with your own life, and let's say you're trying trading out. You're going to give trading a really big go, and then slowly you morph your lifestyle or your trading or your career or whatever to be more able to trade more frequently, more full time. And then once you've done this critical step, you've bridged that gap, then you can say, look, this is it. I'm now going to do the final step. I'm now going to increase my trading size. I'm going to commit much larger capital. I'm going to do this full time. This is now my new career. And then it's the right time to go onto the, on the prop side. So that's why I think it's in a way, guys, it kind of complements each other. Okay. So really, I want to draw the instead of saying, oh yeah, retail accounts, it's bad. In the futures retail space, I'll say closest to equal playing field. And if you use it right, if you use the right attitude and the way you position yourself, it can actually very beautifully complement each other. You can come up to a prop trading desk and say, hey guys, look at my live trading account. I've been trading live. This is not just theory. I've been doing it. It's an easy way for you guys to build a track record, also to help you to get into prop, depending how it's working. Okay. So that's how it works on that side. And as I said, obviously the one big thing you don't have is the trading floor, but there is certain ways you can make the trading floor experience in terms of learning and understanding, still possible. And that is, of course, things like, for example, the Axia, career program. For those who don't know it, again, I'll just be, for those who don't know it, you can go on the website and see from there, to onboard yourself. Things like the career program, things like having a professional community of traders where you can talk to, who you can critically evaluate and know that they're like actual real traders to lean on, and that you can digest and learn from, not just like random strangers who you have no idea who they are, and so on. So you can still bring the floor to you in many different ways. Okay, in many different ways. So that's sort of like the crux of the matter in that kind of sense. So I'll just go through a few questions here, guys, for those who, I think I see a lot of questions coming in. So let me just see. Okay. Yeah, so I see questions here about commissions, and this is true. So commissions and for example, using the ES as an example, commissions on the micro versus the full contract, shall we say? So the E-mini versus the micro. 100% true. It is more expensive relative. So the tick size you get from one tick versus the commission, it is true. But I would say that's probably, okay, this is me assuming trading strategies and so on. But if you're truly scalping for a tick or two and truly only doing that, and the losses you take is still a tick or two, then yes, you can trade the full contract because it is more scalable for a small account. But other than that small sort of example, you should be trading on the micros. If you're really trying to be in a trade for anything longer than just a scalp, then, and if you find the commissions are really racking up, then it's also a good indication that probably you could be over trading. And again, I don't want to prescribe that you could be over trading as a way to address your trade, some of your trading, but that usually is a very good indicator. Okay, so anything away from a scalp or like very, very ultra short-term trade like that, and in that case, yes, you could be trading not the micros. Anything longer than that, then 100% you should be doing on micros, and going for anything bigger than a scalp trade. Okay. Okay, so I just see a few more. So do we scalp? So strategies, it depends who you are as a trader. So a lot of the traders, some are very scalp based, some are very sort of news driven, some are very sort of longer term trades driven. Well, basically it's the whole variety, the whole intersection of trades. So it really depends on the person. I myself are a lot more like now doubling down on trading more like news and more infrequent kind of trading myself personally, but that just depends on the person and so on. So in terms of how long a track record favorable of getting into props? So again, I can't really answer that specifically because it just depends so much. But again, something where, let's say this, let's use this as a good example. If you were to fund yourself, hypothetically, what kind of track record would you be comfortable seeing? If you can answer that, then you can answer what kind of the prop guys would be comfortable seeing in terms of a track record. Okay, so if you're confident enough that you can take the next step, go into prop and tell them, guys, hey, this is a really strong track record, and so on, then it likely is. So just use that proxy of, if I was the other guy in the prop side, would I fund, myself? Then that's the answer to your question, I think, as a sort of a good example. Okay. Cool, guys. Well, I think that's really what I want to show, because I think I saw this question coming up a lot, and I feel, to really summarize for some of those guys who are really coming in late. Again, the prop trading accounts and the retail trading accounts can very much complement each other. If we're talking about the futures broker, the futures and options side, they can complement each other. It's all about just being strategic of where you are in your career. New trader, experienced trader, funding and account size, and then just being very nuanced with this kind of thing, okay? And approaching it from that side. So don't let the sort of all these conversations online sort of say, oh, retail's bad, prop is good, and so on. They can very much complement each other, and it's up to you to be smart, to use the tools you have available, to take advantage of that kind of thing.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now, in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.